Welcome to Flipping Out with your host, Paul Lizell, your leader in virtual wholesaling and investing in today's real estate market. Each week, he will be joined by some of the biggest players in the real estate space who will share their experiences, knowledge, insight, and tips for making it big in the industry. And now, here's your host, Paul Lizell.
How would you like to have a full or part-time business that allows you to create a flexible work schedule around your busy lifestyle? Would you like to earn between $60,000 and $500,000 annually working from the comfort of your own home? If so, then virtual wholesaling may be the business for you. Contact us at reauctionacademy.com and find out how to get a jump start on building a cash flowing machine without the headaches of dealing with contractors and homeowners. With an investment starting as low as $7,000, you can be well on your way to living the virtual investing lifestyle of your choosing.
Hello and welcome to another episode of Flipping Out. This is your host, Paul, and today with me is Bailey Kramer. Bailey, we just gotten to know each other here a little bit, and you're a very, very interesting person for me to interview for the fact that you're still in college, which is great. You're a junior at what university?
The University of Central Florida.
University of Central Florida in Orlando area, correct?
Yep.
Which is awesome. And you read Rich Dad, Poor Dad, which got gave you the itch to get into real estate investing. And let me tell you, you're getting into at a great age and a great opportunity here. I mean, we are in a red hot market here, the way we are. And there's going to be so much opportunity. We'll talk about that later in the interview, where Q4, it should open up more deals for you. But let's start. Just give us your background a little bit. Tell us, obviously we know Rich Dad, Poor Dad got you into it, but just give us your background and then what areas of investments that you're looking at right now.
Yeah. First off, Paul, thanks for having me on the show. I'm super excited to chat about, everything that's going on right now. So kind of to dive into, my story, how I got involved in real estate. Like you said, I'm still a junior at the University of Central Florida, and Rich Dad, Poor Dad's that classic purple book that gets a lot of people interested and gets the mind thinking. And that's what happened. And that's what happened for me. So read the book, and he mentioned real estate a few times in there. And I said, I need to learn, find out what that even means. At the time, I had no idea. Yeah. So I just looked up on the internet, real estate investing, how to get started, all that good stuff. And then the resource Bigger Pockets, which I'm sure a lot of your listeners are familiar with, that kept coming up and up and up. So I spent the next 3 months after I discovered Bigger Pockets, listening to their podcasts before class, in class, after class, you name it. I was just consuming information. I was learning something new each time, different asset classes, different strategies, different people's stories, super interesting. So fast forward from there, after the 3 months, I was like, okay, I think I have a pretty good idea of, what's going on. There's so many different things. I kind of have to pick a direction. Yeah. So I ended up joining a multifamily focused mastermind group because that's kind of what I saw as the golden ticket. I was like, multifamily syndication, I can get 1,000 units by the end of this year. I'm going to be living big. So, after doing a little bit more learning, a little bit more reality check, I realized that there's just less multifamilies out there. They're a little bit, you're dealing with a different sophistication of owner. They take a little bit longer to close. Yeah. So, and don't get me wrong, love multifamily. They have so many benefits, but for where I was at right now, I came to the point where I said, let me start with single family. Let me get some momentum going. And I know that will, spiral into so many different things. Oh, absolutely. So, and that's kind of catching up to speed where I'm at right now is I partnered with somebody in the mastermind. His name's Frank, and we are acquiring single family properties in Northern Illinois. That's where he lives. That's his market, his backyard. My family lives an hour and a half north in Wisconsin, so it kind of works out conveniently there as well. And I know we'll jump into it, and we're focusing on the creative financing and the fix and flip properties.
That's awesome. And that market, Northern Illinois, is ripe for rentals. Yeah, you really can cash flow properties pretty well. Taxes aren't too horrible there. Cost is low, and good blue collar working class area.
Exactly.
Where you have good jobs, good solid jobs in the industry. So definitely a great market to be in. I know a lot of people, a lot of investors who are in that market. So definitely a good choice for you guys there. You also got it in Orlando there if you ever wanted to dive into it. But Orlando's a whole other animal in and of itself, as you know.
Right. And actually, like when I was going through the whole journey, I'm still on my journey. Of course, everyone's on their journey. But when I was multifamily focused, I was starting to look in Orlando for some properties, and I just couldn't make sense of any of the numbers. I was getting a deal from a broker, and I was like, it's $180,000 a door for a property that needs to be completely renovated, fixed up in an awful neighborhood. I was like, if it was brand new, I don't know if I could pay this much in this. So yeah, Orlando's a whole nother beast, and Southeast is a whole nother beast as well.
Oh my goodness, it is. Yeah. I think it's good fix and flip market where you can make some good money doing some of those things, but cash flowing is really tough there compared to other markets. There's obviously certain markets you really want to target for cash flow. And generally it's those blue collar working class, the central US where I love Indiana and Ohio, right. They cash flow crazy, right? Cash flow crazy good. Tennessee, you could do some similar things. The Carolinas, both of them are very, very good for cash flow. Texas also ripe for cash flow. Yep. And these states have a lot of things in common as far as lower cost of living, right? You have lower taxes generally for the most part, as far as real estate taxes, except for Texas, they have a little bit higher taxes there. But no, there's so many great benefits of those and good jobs. You want to be targeting markets, obviously, that have good job growth, good stable areas, not ones that are on the decline. Like West Virginia might be tough right now with, being a coal area. So that's tougher for jobs for sure. So that's an area we'll never focus on. So I want to jump real quick because I know you would mention you had a lead generation company as well, right? Yeah. Would you talk a little bit about that? That's incredible that you're getting into this business this quickly and then you're creating other businesses within it.
Right. Right.
So talk a little bit about that. I know you're in multiple markets there as well.
Right. So the company's called the Property Dogs, and I started it with the partner that is in Illinois that we're, acquiring these properties with. So how that kind of came about was, like I said, he's been in the game for 20 plus years, and he's been doing the single families, the fix and flips, but he came to me because, something that I bring to the table is I have a lot of time and a lot of hustle. So that's something that, number one, the time piece, a lot of people have families, they have jobs. So it was, how can we work together to generate some leads and get some more properties? Because things on the market were very tough. If it's on Zillow, if a realtor's listing it right now, it's tough. It's not that it can't be done, but it's tough.
Just hard. Yeah.
Right. So we put our heads together and said, let's start doing some off-market lead gen for his market, which is, like I said, Northern Illinois. And we did that and we found a lot of success out of it. So we figured, okay, how can we duplicate this and kind of like you said, create another stream of revenue, and as well as it's really just sharing resources amongst other, multiple people to keep, everyone's costs low, to get results for others, and to keep doing what we're doing. So that's how it came about. We're single family focused, and we have clients, like I said, in New York, Georgia, Florida, Maryland, and I'm probably missing a few others, but anything from people who want to do fix and flips, anything from creative finance strategies. And we're also actually starting to work with some realtors as well, who are looking for more leads for their company as well.
That's very, very interesting. It's just great because you can potentially grow and nurture that business and always be giving you some extra income, on the side here as well, which is awesome. I love your focus on single family. I do think that asset class right now is just perfect to be in. And you're going to find deals, obviously off market deals like you're doing right now. Right. You're doing creative financing where let's talk a little bit about that, because you're doing a lot of subject to deals, right?
Yep.
Give us like a sample subject to deal that you guys have done.
Yeah. So I'll give you the home run subject to deal.
Perfect.
Because who doesn't want to hear the home run one?
That's exactly right.
Of course, these deals aren't your everyday deals and all that good stuff, but I'll give you the home run one. So we contacted a property. It was off market. And the reason why we contacted this one is because it had low to no equity. So that's just a sign that someone might be interested in selling. That's one of the lists we pull. And with this specific property, when we contacted him, the timing was perfect. So actually, let me tell you how he bought the property, because that kind of rolls into the whole thing. He is a military guy, so he was able to utilize the VA loan,
Huge.
which in simple terms, he had to put nothing down on the property. He was able to get a great interest rate of 2% that I couldn't qualify. I probably couldn't qualify for a loan right now, being a student by myself. So he bought the property about a year or two ago at a pretty high price, to say the least. Market's been hot. Obviously, COVID escalated that, but nonetheless, he bought it at a very high price. So next thing you know, a year or two after he bought it, he got orders to move to Texas for training, Navy, military orders. He's got to go to Texas. He doesn't want to be a landlord. His wife doesn't want to be a landlord. He needs to just move on from that obligation of the house. So he was getting ready to just put the keys in the mailbox and walk away because he didn't want anything to do with it. And let me say this, because probably a big question that a lot of people have is, why didn't he just sell the property? Well,
no equity.
Yeah, exactly. No equity. Even if he tried to sell it, himself, he'd still have to come out of pocket for, first of all, the difference between what he bought it for and what somebody would buy it for quickly that he's expecting someone to buy it for.
Realtor fees too. Yeah.
Realtor fees, closing, the whole thing. He would have been out of pocket probably $15,000 when it's all said and done. And he doesn't have the $15,000. He doesn't want to come up with $15,000. He just wants to move.
Right.
So what we're able to do is, subject to the mortgage, we're going to be taking over his mortgage payments so his taxes, mortgage, and insurance are about $1,100 a month. And this property rents all day long for $1,800.
Oh, that's awesome.
So that was like the home run slam deal. We put basically just closing costs, and we actually we're paying half of his mortgage for, we're basically letting him stay there an extra month while he figures things out, giving him $500 for that. So all in between me and my partner total, we're looking at $3,000 cash flow before the, repairs and maintenance and some of those smaller expenses is between $600 and $700. Obviously there's some expenses that we need to pay for, but that's been our home run deal so far.
Totally. You'll have your money out of that between 4 and 6 months into the project, which is great. Right. And these subject to deals, you just can't find enough of them, to be honest with you. I mean, the greatest thing where you're literally $3,000 into a property. If I go buy, and I buy a lot of bank owned stuff. Yeah, my deposit's usually $3,000 right there, let alone a purchase and all that kind of stuff. Then I got to refi and hope to recoup those costs out, and not at 2% on a mortgage, right? So you're in a great situation. This is just a perfect example of how you're helping somebody out of a tough situation that they didn't want to be in. It's a win for you. It's a win for them because you're saving his credit and giving him the opportunity to just go without having to worry about anything. Right. It's where real estate investors really come in. They fill that void and they take care of it. A realtor coming in can't do anything for this guy. They're going to work a short sale, which is going to damage his credit and cause problems. So no, I mean, this is a perfect example of how real estate investors really help people in this world.
Exactly. And two big questions that, after explaining this deal to people that I got, and I'm sure some of your listeners are thinking, number one, this property, it must be, a bad looking property, needs a lot of work. How could someone just give you a beautiful looking property and, that kind of thing? So to answer that one, this property, it still blows me away. The floors are brand new. The kitchen. I would live in this property. It's like a very, very nice looking kitchen. So as far as the condition of the properties, all the deals are different. We've bought somewhere we have to put some money into, somewhere it's perfect condition that I would even move into. So that's that one. And then another issue that we run into a lot from the sellers and a lot of people ask is, so this guy's going to have the mortgage in his name. How is he going to be able to qualify for another loan? That's a question he asked. A lot of people ask that. And first and foremost, talk to your mortgage lender, talk to your attorneys, all that good stuff. One thing that we could say though is there's something called DTI, debt to income ratio form, that these sellers can fill out when they're applying for a new loan that shows, listen, this debt, I'm not obligated to it. Someone else is basically responsible for it. Mm-hmm. So that's just one small question we get asked a lot is, he's going to keep his mortgage in his name. How is he going to be able to qualify for another loan? That's one small piece of the fix is the DTI form.
Right. That's huge. I mean, that's a big piece right there.
Yeah. Yeah.
That's a big saver. This is a golden egg sample deal here. There's other ones, and I've done them too in the past, where you're getting $200 or $300 cash flow a month, which to me is still a no-brainer.
Yep.
Anything that's above what you're paying to me is good.
Right.
Because you've got now control of an asset that should over time go up. Yeah, you're going to have maintenance. You're going to have some of that. But if it spits off a couple $100 a month, man, that's still great. And if you're not into it for much money, it's why these are the great deals out there.
Yeah. And we're actually, we're doing another deal, and we can get into it or not, but we're actually not
give a sample
cash. Yeah. So let me give you the quick rundown on this one. There's the property. The guy is already 16 years into his mortgage. So at a 30-year mortgage, he's already been paying for 16 years. He bought it at the last market crash. Mm-hmm. So it's basically worth what he bought it for 15 years ago. He couldn't have bought it at a worse time. He was just in a bad situation, like a lot of people were. But he held on till where we are today. And we kind of looked at the numbers and said, okay, he has only 14 years left on his mortgage. And what can we do about this? So we're buying this property, same thing, subject to, and we actually do need to put a little bit of work into it. About when it's all said and done, $9,000, including closing costs. There's a realtor involved in this one.
Okay.
This was actually an on-market deal, which is funny enough, but.
Oh, they have it. You can get them on market. Like these deals are actually out there and available on market.
Right. So, but the funny thing is, so it was listed on market for $135,000. We looked at it and said, it might be worth 135 fixed up. What do you mean 135,000? So we actually bought it for $95,000, what he owes on it, what his mortgage is. And we subject to that. We have to put about $9,000 in. But the thing is, we're really not going to cash flow much money. It's a pretty break even, maybe $100 a month between 3 partners total. Okay. It's not a lot of money. The play on this one was the long-term look on this. We said, okay, it has 14 years left in the mortgage where the principal starts. Clear. Yeah. And then it's free and clear. So we looked at it more of the fact that, okay, we each put in $3,000, and in 15 years or 14 years, it's going to be worth, it's going to be free and clear and worth about, let's just say 150. Mm-hmm. So it's a different type of investment that I didn't even know we could do that type of thing going in. I didn't know that was something I'd even be interested in. And it's not your everyday deal to do that. Cash flow is a big piece of the game, but we figured, if we put $3,000 down into it in 15 years, and also we have properties nearby that'll be easy with the management as well. Right. So in 15 years, we'll have a $50,000 each nest if we want to refi it or sell it or do whatever. So that's a unique one as well.
That's great. That's great. Now you're also doing fix and flips. Is this your first fix and flip that you're doing currently?
Yeah,
you're working on?
The one that I closed on a few weeks ago with my partner, that's the first fix and flip that I've been part of.
Yep. They're fun, and it's a whole different animal, right? And each one is different in and of itself. Sometimes they run smooth and are great, and sometimes you run into all kinds of unforeseen things. Trust me, been there, done that already. For 20 plus years. So we've been there, done that. So are you doing this as more like a wholesale where you're just fixing up a decent amount to sell it, make it mortgageable, or are you doing a full scale?
So we're doing a full on fix and flip. So we again, this is another off market deal. The list that we pulled this one it was a vacant property. A lot of times that's just another sign that, for your listeners, that sellers might want to sell if the property's sitting there vacant.
Oh, heck yeah.
So
extra motivation there.
Yeah. And then once you start talking to the seller, you realize why it's vacant, and that'll really give you the indication. Yeah. So for this one, the property owner bought it. He wanted to fix and flip it, but he has so many different projects going on. He owns companies and he's just a busy guy. He wants his cash back to put it into put it into something else. He just doesn't want to wait any longer and do the work.
Gotcha.
So we're able to buy it cash at the price that he bought it for before he actually made improvements and gutted the place for us.
Nice.
So it was perfect in that sense.
Totally.
And so we came into it fully gutted. We need to put about $30,000 into the place. Mm-hmm. And we're hoping to sell it for the 170 mark, which would make for a nice little first deal for sure.
Yeah. What do you anticipate the projected profit is on that one?
So we're looking at between 10 and 15,000 for me and my partner. We're 50-50 on this one. So between $20,000 and $30,000. Nice profit at the end of the day.
Perfect. Those are great. Sometimes you get some big ones. Sometimes you get the smaller ones, and you take those. That 20, 30 all day long. I'll take.
Yeah, like we were talking about it. Do we want to go for it? Do we not? It's not a home run, but not every deal is going to be a home run.
No. And you do the deal. Look, I mean, the market the way it is here, it's going to potentially increase while you're rehabbing this property here. So when you slap that on here in this late spring, early summer, you're going to be in a good position. Hopefully get a good, strong offer on that property.
Exactly.
The fix and flips are fun. I love them. I've done so many more this year compared to years past, just because of constricted inventory. And instead of just wholesaling these deals and maybe making 5 to 10, decide, you know what? I'm going to flip some of these because I got potential to make 30, 40, 50 on some of these, which I've been doing. Just trying to maximize each deal now. And for people out there, if deals you're worried about constriction of inventory, just maximize your profits on your deals. And Bailey, with what you got going on here I love the subject to deals. It's just such a great model, and it's such a great way to pick up rental properties for very, very little. Right. So, it's just a great model. Continue to do that. Continue to do the fix and flips to give you cash now. And I know you're looking at other asset classes and eventually get into that multifamily, which the big multifamily for me is a little bit further down the road right now too. Because I'm kind of constricted. I'm looking at the 10 to 50 right now. I'm looking at that one that's kind of being ignored by a lot of people in the industry here.
And that's a good spot to be in too. The 10 to 50 is. For sure.
No, I 100% agree. Are you going to look what's your next step? Where are you guys going from here? I know you got a great little migrant, continue that, but do you have a next step where you guys are looking to go?
Yeah. So as far as next steps, we kind of just want to get to scale. Mm-hmm. So like you said, we're doing one fix and flip right now. We want to do one a month, and then we want to do, so we want to scale that. We want to scale the amount of rentals we're doing. Mm-hmm. And then at the same time, I'm actually getting my real estate license down in Illinois so that we can capitalize on more of the leads that we're getting, and that we can
list them cheaper and save some money when you resell them.
Exactly. And it was a bit, I've been debating with myself for literally a year. Like I checked my email and saw the last time I inquired about getting my license. It's been a year, and I've been back and forth of should I do it? Should I not? And at the end of the day, where I'm at now is I'm at the point where, I want to get the license. I could use that extra little squeeze of capital to put me that much farther. When I'm, a few years down the line, great. I can just hire that out. Forget the few $1,000s that I'm saving or earning, and kind of spend my time focused other places. Yeah. But kind of where I'm at right now, I'm super excited to get it and be able to just capitalize on a few different aspects of it, and snowball that money into more investments and keep growing.
I think it makes sense. I'm a licensed realtor here in Pennsylvania too. And I just think it makes total sense to do it. For me, it's an extra, usually 30 to 40K of income per year. And I'm not even working the business, right? This is on commissions on properties I'm purchasing that I would otherwise not get. So for me, it just makes total sense to do that and have a license. I think for a lot of people, and I think it's going to make total sense for you as well. Yeah. And for people listening out there, that a lot of people are like, do I get it? Do I not? Well, because they're all worried about liability. Well, you just disclose it. You have vested interest in this property. You are a licensed agent and you have vested interest and you're covered. I mean, that's pretty much it. It covers you for a lot of other stuff as well. So it's not a liability that way. Some people look at it as that. I look at it as an asset. Yeah, it takes time to get your license, right? And you got to study and do all that. You're already used to studying. You're in college.
Exactly. So yeah, I'm in the middle of the course now, and yeah, love to chat with you too later on about the specifics of how to even go about being an agent and an investor, because that's something that I think a lot of people have on their mind. So
we can talk about that. I mean, look, if you want to dabble in a business and push the agent thing, that's good too. But what I'd recommend for people who are looking to do that is get people underneath you and just refer it, right? And then you're splitting the commission. You don't want to have to do all the work. Listing is a pain in the butt, right? And
100%.
running around properties with buyers is a pain in the butt.
Yeah.
So it's not something I really push doing that unless you have people underneath you, because you want to focus on investing. Being an investor in this business is where you make true wealth. Being an agent is just transactional income, right? It's kind of like the fix and flips. Transactional income, you're getting it. You need it to live day to day. True wealth is made on long-term holds, right? The long-term holds. And I do a lot of, and we'll talk about this too. I actually do a lot of owner finance deals where I'm the bank. I love them, Bailey. I probably got about 15 of them right now. And, over the years, and some of them paid for 7, 8, 9, 10 years now. It's crazy.
Wow.
But that's it's mailbox money. The drawback to that is, I'll give the positives after the drawbacks. The drawbacks is you don't get to depreciate it, right? You don't have anything really to write off. So the positives are you're the bank. You don't have to worry about tenants and toilets, right? You don't have to worry about maintenance of the property. So you take care of all that kind of thing. That's a whole other asset class in and of itself. One I definitely recommend. Like I kind of fell into it in 2012, 2011, when I first started doing these things about 10 years ago. And I had a deal that was tight and I could have sold it and maybe made $500. I'm like, forget this. I'm going to sell it with owner financing, hold over time. And these things pay out more than anything else I make. I'm telling you, the profits on them are insane.
Yeah.
So definitely another thing that you could do. I mean, because a lot of these properties that you have the subject to, you could wrap these properties and sell them to an end buyer too. And then go that route. If you get tired of them, right? You got options. You got total options with what you're doing. But I love what you're doing. Just think that could be another aspect of your business for down the road. Just planting a seed for you.
Oh yeah. I mean, that are you talking about lease options?
Lease options is one. I'll sell on installment sales where it stays in your name and you control it too, and you're kind of wrapping it. Lease options is a good way to do it. But as you know, most people don't convert on those lease options.
That's good.
I'd much rather sell which is good for you, right?
It could be good if they're putting a nice down payment on the place.
Totally.
Too.
Yeah. Most of the time you don't want them to.
Exactly.
But every once in a while you'll get one, on the owner finance where they refinanced it and I got paid off windfall money. I mean, it's great. Property I paid $3,750 for. This is going back about 5 years ago. They refinanced it. A year in, I made like about 10 grand on payments. And I got paid another 33,000, whatever it was. My net profit was 38,500 on a $3,750 deal. Just can't beat that.
Right.
The ROI is awesome. So think about that for the future too, as definitely another asset class for you as well.
Yeah, absolutely.
To go alongside your buy and hold.
It's just tools in the toolbox.
Tools in the toolbox. You want to have everything, right? The best thing for this deal is this. The best thing for this deal, this was going to be a rental. This one's an owner finance. This is a fix and flip. You just look at each deal separately in and of itself. What is the highest and best use of this property?
Right.
And I think in real estate, if you do that, you're going to be very good overall. One quick question for you too. I forgot to ask you, how old are you since you're a junior in college?
Yeah, so I'm 20 years old right now.
Awesome. You can't even drink yet.
I know. I wish I can come to Philadelphia, grab a beer, but we'll have to wait a few months.
Wait till you turn 21. We'll definitely do that. I might come down and visit you down in Florida here soon. No, that's awesome. But to be 20 years old and in a position what you're doing, you are setting yourself up for the future. I first got in the business, I think when I was around 26. So I've been 21 years in the business now. So you're in a great spot. You're ahead of me. You'll be ahead of me at my age. You'll be far ahead of me, which is great, which is absolutely awesome. So keep up the work. Is there anything else you wanted to talk about? Any different strategies that are working really well for you right now that the audience might want to hear?
Yeah, I think, we definitely covered a lot. Just to say, like I emphasize what I was saying before with the types of lists we're pulling. That's a big question I get a lot. These off-market deals. Yeah. The vacant leads have been great for us. High equity, low equity. Something we've been struggling with actually right now is the pre-foreclosures. Everything's just really weird with COVID right now with pre-foreclosure laws. So that's just another piece of information about what exactly we're pulling from.
Keep on that one because that will open up more as COVID dissipates here, which it looks like it is. It's going to open up. I really do expect in Q4 a windfall foreclosures. And I know I talked at auction.com and they're expecting it big time. big time foreclosure. So you're going to see a rate far exceeds what happened in 2008 crisis, far exceeding that. So for people for the future, know that as soon as that hits, you're going to see such a change in this real estate market. We're at the peak now, in my opinion, and we may have already crested and started going slightly down. Yeah. Even though with inventory constricted, certain markets, it's still going up. But once we hit that where you got more inventory, the prices are going to level a little bit. If interest rates go up, prices are going to continue. Hopefully we have a steady leveling off and not a sharp decline. None of us want that.
I know. And the hard thing is only time will tell.
Right. Absolutely. Absolutely. That's still something that genie's got to be letting out of the bottle. We'll figure out what happens when that happens. And I'm sure the government will intervene and cause problems in one way or another for us, as they always do.
That's why I got to buy crypto. No,
that's exactly right. That's a whole other crypto, the other asset class we'll talk about. You're 20, buy a few, stash them. We'll talk about that offline for sure.
Yeah, that's a whole nother ball game.
That is a whole other ball game, but you'll definitely need to get into it because that's another asset class that's for the future for sure, the digital currencies. So it was awesome talking with you. I appreciate all the info and the samples that you had here. It was tremendous. Our audience is going to get a lot out of it, man. I appreciate it.
Yeah, Paul, really appreciate you having me on. Thanks again.
You got it. You have a good one.
You've been listening to Flipping Out with Paul Lizell, the #1 success platform for virtual wholesalers. Visit our website, thevirtualinvestor.co, for more information about how you can leverage virtual wholesaling to take control of your time, enjoy financial freedom, and live life the way you've always wanted to. Join us again next time for another informative discussion right at your fingertips.